Dear learners, this is Shashi Ramachandran. So, in this video, we are going to learn about the qualitative characteristics of accounting information. So, the basic objective of financial statements is that profit and loss account must give a true and fair view about the profitability position, and the balance sheet must reveal a true and fair view about the position of assets and liabilities, or we can say financial position. Beside this basic aim, the accounting information or these books of account, they also possess some qualitative characteristics, and like so that the information contents of the financial statement may become more meaningful to its users. So today we are going to discuss those qualitative characteristics of accounting information which help to make these information more meaningful. Okay, so moving to the first one, the first characteristic of accounting information is reliability. So reliability means the users must be able to depend on the information. Okay, or in other words, we can say that only information that is reliable should be included in the firm's accounting reports. Now, what is the reliable information? So reliable information is something which is which the reliable information should be free from the error and bias and faithfully represented, like represents what it is meant to represent. That means it should be free from bias, it should not be partial, there should no errors in that. It should be presented in the way it is supposed to be presented, means very fair and view fair picture of that. Okay, and it should be based on the data which are checked or verified. There should be a source document to verify it. There should be some supportive document which helps to check the authenticity of that particular information. So the first characteristic is of accounting information is that it should be reliable. Okay, now moving to the second one, says that accounting information should be relevant. Now here, relevance, the accounting information must be available in time and must influence the decision of users by helping them to form a prediction about the outcomes. So here, presenting the information is called relevant. It should be relevance here means that accounting information should be on time. Okay, if it is you're getting it later, like not on timer or not during the time when it is supposed to be required, then it will be too late. For example, most of the people, they for tax saving they invest at the end of the year. So by that time accounting information should be released and the relevant information should be released so that they can take a decision on that. Okay, but what is relevant information is a disputed matter, as one thing is relevant for one user may not be relevant to other user. So relevant information does not mean more and unneeded information which merely increases the information or increases the confusion. However, the disclosure as per the law must be fulfilled even though it is a complex in nature. So relevancy of the information depends on the user also, that how what type of information exactly he needs. Okay, but it should be on time and it should help to this users to take the decision. Moving to the next one, understandability. Now understandability means the decision makers must interpret accounting information in the same sense as it is prepared and conveyed to them. Okay, so a message is said to be effectively communicated when it is interpreted by the receiver of the message in the same sense in which the sender has sent. Are you getting this point? That firm, the investor should receive the message in the same way, that the way the sender has sent that. So in that, if and this also the user also assume to possess reasonable knowledge of business and are willing to study the information with a reasonable diligence. Okay, and like accountant Accountants should present the comparable information in the most intelligent manner without sacrificing the relevance and the reliability. So, understandable here means to make it meaningful, to make it simple, to make it the way it is supposed to receive by the receiver. Means the sender, whatever he is thinking, the receiver is getting the same message in the same way he is interpreting the message. That is called understandable. Now, moving to the next one. Okay, now this actually says that comparability. Now, comparability here means like the information should be disclosed in such a manner that it can be compared with previous year figures of the business itself and other firms' data. So, comparability means the accounting information should possess this characteristic which makes it possible to compare it with their own figure of previous year or other firms' data, which is also called as intra-firm comparison and inter-firm comparison. Okay, now this characteristic, why is it required? The purpose of comparison is to detect and explain the similarity and the difference. If there is a difference, why is it so? If it's similar, why is it so? So the reason behind the detection of error, the explanation of the similarity, all can be like possible with the help of this comparison. So the data should be in such a manner that it can be compared. And how is it possible, like to compare the data? So it is necessary to have a consistency. Now what is consistency here? Like the data should be of a common period, or it should be measured in a common unit. Okay, or you can say okay, I'll explain you another way, that the accounting principles or the methods which they are using in accounting, that should be same year by year. Okay, so this is only this comparison is possible, or the consistency can be maintained only when the accounting period, accounting concepts, accounting and the conventions are used consistently by the management. The method used for calculating depreciation this year, same method should be used next year also, then only the data can be compared in a useful or a correct manner. Is it clear? So, like the data are compared in such a manner, and the consistency is maintained. So, standardized accounting policies be followed consistently so that the interfirm comparison and intrafirm comparison can be made effectively. Okay, so we can say that accounting information must possess all these qualitative attributes, all these qualitative characteristics. However, the significance of the financial reporting is reduced to a user who lacks understandability and comparability of the accounting information. That means from his end also, from the user's end also, he should have a knowledge of some knowledge of accounting, like to compare and to understand this accounting terms. Then only he can understand, he'll take it in the same way as the sender has sent. So these information, these are the characteristics or qualitative characteristics which accounting information should have. And I really hope that you like this video, you understand the concept, and share this video with your friends, and do subscribe to my channel Exuberant Learners. Also click on the bell icon to get the latest updates on my channel. Thank you.